So first of all, let's talk about why we launched this i-EDU portfolio. So it is because we have received a lot of demand from the ground, especially from advisors like yourself, about the need for a goal-based solution to help clients save for their children's education. So, and we hear you. As an initiative from iFAST, we have launched this i-EDU portfolio. Okay. So I believe most of your clients are parents and most are already planning of hoping to send their children overseas for tertiary education, whether it's Australia, United Kingdom, or US, or other preferred countries. So, with rising education costs, proper planning is no longer optional, it's a must. Now, let's take a closer look at the education cost challenge. As shown on the slide, tuition fees and living expenses are increasing every year. More importantly, education inflation is higher than general inflation, averaging about 6 to 7% per annum globally. For example, based on the data by our research team, the current estimated cost to study in Australia is around 215,000 ringgit. But in 10 years, this could rise to approximately 300,000 ringgit. Without a saving plan, it is extremely difficult to accumulate such a large sum in a short time. That's why early and consistent saving is a must. Okay, so these are the common education saving solutions that are available in the market now. You might already be familiar with some of these options. First, fixed deposit and SSPNI are safe with modest returns from 3.5 to 5% return, and SSPNI offers up to 8,000 ringgit tax relief. Insurance saving plans provide some protection with 3 to 4% per annum returns, and shares and real estate offer higher returns, but it comes with risk and less liquidity. Unit Trust strike a good balance. Is professionally managed, diversified, and more accessible for most parents. So each of these solutions has its own pros and cons. So it's more important to consider clients' financial goals and risk appetite before choosing the right one. To make it easier, we have launched the i-EDU portfolios, a goal-based investment solution specifically for education planning. We have developed two professionally managed portfolios based on clients' different risk appetites. Firstly is the i-EDU Scholar. This is a balanced portfolio with 50% fixed income and 50% equity with an expected target return of 6%. And the second one is the i-EDU Achiever. This is more suitable for clients with higher risk tolerance. It's a moderately aggressive portfolio with 30% of fixed income and 70% of equity with a target return of 8% per annum. These portfolios are managed by our experienced team and designed to help your clients to plan ahead through forced saving. Now, let me briefly touch on the core features of the i-EDU portfolio. It has a low entry barrier with a minimum initial investment of just 1,000 ringgit and regular monthly savings starting from only 200 ringgit, making it accessible for most clients. The auto debit option ensures that contributions are consistent and hassle-free, encouraging the discipline without extra effort. The investment type is managed portfolio that is actively monitored by our managed portfolio team. Flexibility is also another key benefit with no lock-in period, so clients can make withdrawals if needed. However, the redemption period will take about T plus 8, like the normal managed portfolio, for all funds to settle out. So this pet portfolio is suitable for clients who are planning for children's education and for long-term saving. Next, these are the key takeaways of our i-EDU portfolios. First, it helps your clients to achieve long-term education goals because nowadays, education is no longer a luxury. It's a necessity, it's a non-negotiable event. Starting early will ensure you have the necessary funds when the time comes. The best part is client can start small and grow big. With just 1,000 ringgit upfront and 200 ringgit per month, it can gradually build a sizable education fund over time. Client will also benefit from our professional management. Our experienced fund managers will actively managing and adjusting portfolios based on solid research and strategies. It's also a very flexible option. There's no lock-in period, so you can access your funds when needed. Most importantly, it gives clients a peace of mind, allows them to focus on what truly matters, their family without being overwhelmed by financial stress. And to make things easier, we provide a user-friendly i-EDU tool to help clients plan and visualize their education savings journey with confidence. So now I will pass to my colleague Bushan to talk about the portfolio itself in depth. Yeah. Mhm.
Right. Hi, everyone. Good morning. Slides okay? Loud and clear? Right. Thanks for joining today. And thank you, Yanting, and also to the iFAST BD team to organize today's session. And in my session now, I'll just quickly run through what is the portfolio about. Um, and I believe that some of the advisors have access to the portfolios, and because we have actually received requests on the portfolio itself. But so today it's just to give you an overview and how the portfolio is structured and how you can actually use this as a tool as part of the client's education plan. So again, uh, the objective here, right? The objective here, it's most importantly, it's long term. Because in the short term, markets actually tend to be volatile. We have seen, right? Like from Liberation Day in April and then until now, when there's 90 days pause that's been announced, we saw a V-shaped recovery. And again and again, right? There have been key events that has actually rocked the market throughout the years, as you can see from this chart. But what's more important is that in the longer term, that the market is on an uptrend, and all the short pullbacks in the market, it's actually will be an opportunity to add in good quality assets to our investments. Right. With that said, also, there are actually many strategies that we can actually address and also take opportunity to be in the markets, right? There are very strategies over there, right? And the portfolio is actually one of the strategy over here. So how if you're actually very familiar to our presentations prior to this, right? You might be very familiar that we always actually share this particular chart. And if those, for you that if this is new, if this is the first time that you're looking at this chart, let me quickly just help you to guide through how to actually read this. So on here, this is the annualized return and also the volatility of the different asset classes. And over here, if you can see my pointer here, it's that these are the number of the years, each every calendar year, and the different asset classes and their returns, the highest being ranked up and the lowest being ranked down. So what you can notice is that every single year, there are different asset classes which are actually the highest performing. So the question is now, how do we actually then pivot to the different asset classes and position in that asset class prior to actually to if we want to actually maximize our returns? The answer will be actually it will be very hard unless you're actually spending your entire time looking at the markets, and even those banks with JP Morgan with all the latest data analytics tools will not be able to do that. But then, what will be then the alternative to that? Will be actually go through an asset allocation method, which is represented by this white color box over here. So if you look down in the footnote over here, it's that how this is being structured is that this is a traditional 60-40 all-weather portfolio, and 60 being in equities and 40 being in fixed income. And over the years, you can see that there are times that the asset allocation method actually performs well. There are times that they are at at the lower tier of this chart. But what's more important is that it is always in the middle, means that it gives you that stability in that return. And if you look in as an annualized return from 2010 until to 2024, then you'll see that it is, even though it is actually giving you a decent return with a low volatility compared to the other asset classes. So again, to emphasize here, it's that the idea of going into a portfolio as an investment is that to get the stability of return, and not the primary goal. It's also not to actually chase for the highest return, but to have the consistent and stability of the return. And this is suits well into an education plan where the plan it's actually for the long term, that the client's children has actually a long runway looking at like 5 to 10 years ahead for them to plan and to actually start saving from now. And what is more also important after that is that um, there's always this question, right? Like buy low and sell high. And also, what is the right timing to buy? What is the best asset class to buy? Should I buy into gold now? And this is all comes into that, whereby 20% or 30% of investing it's about having the technical know-how, but a majority of it it's on the psychology of investing itself, right? How do we actually navigate this investment environment? And you have actually seen this, right? You have seen this chart of the market cycles, right? Market doesn't move in a very straight line. If anybody comes and tell you that they're giving you a return that goes in a very straight line, if it's not an FD, most probably it's a scam, right? That's how the market is. It's that it's not a straight line. It will be moving in a cycle of wave up and wave down. But the thing here is that usually at the part of euphoria, that's when the market is the highest risk, which is logically it's the best time to sell. But practically, put it ourselves into that situation, you would have also experienced it. Oftentimes, when do we actually sell? Because there is a fear of that if we sell, what if it goes higher up? And if you just flip the narrative to the other side, when it's actually at the trough, at the down of the market, it is actually the best time to buy. But then there is the fear of that, when do we want to buy? And very recently, we have actually seen this playing out. Just 1 month ago, after Liberation Day, there was the market quickly rebounded. If the client or yourself, you don't have the conviction on the assets that you're holding, then it will actually deter you to actually taking action to adding position during that time, right? So how do we then do this? Then do we time the market then? Do we time, if we actually time the market, then you need to get it right. If not, if you actually miss the best days in the market, this is actually a good chart to actually illustrate this. A value of $10,000 invested in the S&P 500. If it's invested and not to be disturbing the compounding effect, this is the final value that you get. But if you actually just missed the best 60 days, it is 93% lower than what you would have been actually having. But the best part is that oftentimes the second best day is always comes after the worst day itself. And again, the recent example also played out into this. You saw that the very best return of that market was right after there was a sharp drawdown in the market. But the thing is that now looking in hindsight, right, it's always 2020 that we can see that. But during that point of time, when there was a sharp drawdown, what is the confidence for someone to actually get into the market? And that's why a better strategy to actually go through and psychologically is that by using the RSP method, by having a regular savings plan method, because we actually remove out the emotions and psychological impact of this. And this actually makes us to be stay disciplined, to be always invested. Doesn't matter the market up and down. We just regularly add into our holdings so that we actually smoothen out the curve and right through in the long term of the market. Okay, and and also to show you some examples, right? How much to invest and which fund to invest. This is a customized This is a back-tested model that we just used the data with an starting initial amount of 10,000 ringgit with an RSP of 1,000 ringgit. The portfolio is constructed between 90% in equities and 10% in fixed income. And over the past 60 months up to July, and the total, this is a capital of 60,000 with a final value of return of up 95% and annualized of 14.4%. And and uh, and to put it more in perspective, right? Let me just give you a few other examples of real life examples that actually happened by how RSP method is actually quite powerful. So we all know that what happened in 2021, right? When there was a sharp drawdown in the market, and right, if we track it down, right, there are two ways that we could have invested in the market, right? One, if you see that this yellow line, this is actually by putting in the lump sum, and this is actually at the very peak of the market. So with the lump sum investment until Jan of this year, this is a return of negative 35, and this is referring to a China fund that was on a downtrend. But if it has been on a RSP of monthly of 500 compared to a lump sum of 19,000. When we add it up, the final capital that is being deployed into this particular fund will be the same. But now the returns is different, where the RSP is still negative. This is as of Jan. Would have been better now, but you see that the quantum of difference is that very much more sharply different here. And second thing is that just imagine this psychologically, right? So let's say a client or yourself investors have actually invested in a fund and you believe in the China story for the very longer term, but it has given you negative return for the longest time ever, right? And how and you have seen year after year that it's giving you negative and there's no improvement on that. And finally, when you decided that, okay, this is done, I'm done with China, I'm going to exit, you know what happens? That's when the market rebounds. Have you experienced that every single time? And so then, and we actually will be, instead of having a guided and strategic objective investment method, we will be actually swayed by the movement of the markets. And oftentimes that is how that we lose money. But instead, if having, making sure that first thing is that the fund that we are invested in is a good fund, the good China fund, the companies, the underlying companies are good companies. It's just that the market sentiment is such. By having an RSP method, you can see that the value as actually each month after month has been growing steadily. So psychologically, this gives a confidence and conviction to be stay invested in the longer run by having an RSP method. And once there's the fund breaks even, and then this amount, there'll be more conviction to actually for additional top up into that particular fund. And if you look at a sideways market, right, a good example will be Malaysia. For since December 2021, it has been flat, and only the past 1.5 years, the past 1 year, it has actually been performing well due to the AI boom that we have been benefiting from. Again, of course, lump sum. If you see here, and also with RSP method, the lump sum value, this is of Jan, gives you a slightly marginally higher return compared to doing the RSP. But again, going back to psychology, right? Investor has been investing for this past many years. From the day one, there has been a little bit of positive, negative all the way, slightly positive, and it's just going nowhere. Imagine the psychological impact of seeing that and on the account itself compared to doing an RSP where see you the value of that investment going up slowly but steadily all the way, and still the returns are just not far off. So those who have that patience to actually would have actually held on all the way would have benefited. Now ask this question yourself, and also your experience with your clients. How many actually had that patience, and do you always get this bombarded questions that it has been negative for so long, like what am I going to do? What am I going to do? So that's why that in in either ways, in a down market, in a sideways markets, the RSP actually is a very powerful method, provided that you're actually, of course, DCAing into a quality asset. Because if you're DCing into in a subpar product, then you actually compound and make it worse. And even in actually a global fund, right, where we see that the peak of the market in 21, market down, and then in October 2022, it started to rebound. and it was up all the way until the Black Monday event in August due to the yen carry trade unwinding, and also the recent that data is not included here. You can see that having an RSP method, it's also a good method to ride through these downs, ups, and downs of that market altogether. So, with that said, now going to the portfolio itself, just now Yanting actually said that the brief that there are actually two portfolios for your choice. So, one it's that the iFAST i-EDU Scholar portfolio. So this is structured to be a balanced portfolio, as in 50-50 in equities and fixed income. And this is actually a 5 years backdated data of the portfolio when it was being constructed in June last year. And as you can see, uh, this is on the back test performance of the portfolio in the initial years. There was not much of activity until it was the portfolio actually picked up, and this is then the current actual performance of the portfolio since its inception on 27th of June. And what I like to highlight here is that we have seen a sharp drawdown in the market. And first with the Black Monday, and followed by the in December, we had one more due to the Fed policy, and also recently during the Liberation Day. Sorry, after that was in the DeepSeek impact after Chinese New Year, and also the Liberation Day. With all this volatility in the market, right here, you can see that the portfolio actually had held on quite stably with the year-to-date returns as of 16 May last Friday of negative 0.2. Yes, albeit it's negative, but it is very marginally in a negative territory. And also considering that the purpose of the portfolio is also on the longer term, then this is actually the portfolio has actually demonstrated to be quite stable. And to go into details, and I have also you could also actually access to the fact sheets of the portfolio, like how you actually access the fact sheets of the other portfolios. We will be actually updating in the in the portal, so you can have a detailed view of the fund selections and also the returns of those individual funds. And again, on the Achievers portfolio, it's actually a 70-30 portfolio with 70% in equities and 30% in fixed income. And this is due to the higher percentage of equities being present in the portfolio. It has higher volatility. This is the back-tested results. And of course, what we want to see is that how the portfolio has performed, right? So this is the performance of the portfolio as of 16th of May. And you can see that as of year to date, it's also on negative, but it has, you will see that on that 1 month period has also recovered in tandem with the recovery in the market. So with that, right, what you can see here is that the way that the portfolio is structured is that it has mostly a global presence, very less on sectoral themes. It is to capture uh, a balanced approach way rather than a concentrated and thematic way. So it is very much a core idea of having a portfolio. Even on the fixed income side, you can see that it is all on Malaysian fixed income and without the emerging bonds or the global bonds. And on the global side, it is represented with the market as a whole, and not to be very tactical in being in sectoral. And at the idea, because at the end of the day, the idea here is that to have a portfolio that's very stable, to actually grow that education fund that the parents are looking for the kids, with the time frame of, we are looking at 5 to 10 years by the time that they go to college. So with that, that's the end of my presentation. I'll just quickly look at the chats and see any questions. What's the difference between the portfolio score aside from marketing for education? Yeah. What's the minimum top up? Let me just quickly go through the question so I can have an idea. Do you have mechanism for clients to switch safety in the market down to nearing withdrawal period fund allocation? Is it's always same 50-70 allocation because so market conditions for investor topics the fund system? Okay, cool. Yeah, I'll just quickly. Right, I'll just quickly take on all the questions and let me get an idea. Okay, so the main difference here is that the core portfolio is based on risk profile. How the core is structured is that you have your five different portfolios, and the allocations of the intra asset and also inter assets are based on the different risk profile. That is the asset allocation of the core. And whereas the strategy of the core, it's that it follows the MSCI ARCI market cap weighted index, and also based on the research team's view on the market to underweight and or overweight into certain sectors or country. Whereas this i-EDU portfolio is, as you can see from fund selection, is very much very global. It doesn't have tactical view. The idea here is to have that stability in the returns, so that there is a slow and steady growth of the portfolio's value over time. And 50, yeah, it's always same 50, 50, 50, 70, 30, and the portfolio will be rebalanced when this percentage is actually changes. And the fact sheets, the common practice that we have of the fact sheets publishing is that every month we publish it monthly, and then but for i-EDU we'll be actually publishing it every quarter. And the reason also being said that because we are not going to make any drastic changes to the portfolio in the short run. Going back to again to answer the question, that it is actually structured to be to withstand and to have that stability for the longer run. What is the investment time horizon? The investment time horizon is 3 to 5 years. Do you have Islamic i-EDU fund too? This I will actually, that's good feedback. Currently, no. I'll bring this up to the product team to actually take note on this. How big is the fund size? I do not have that immediate value for that, but the current value, but the last I checked will be, actually, the question will be how big is the portfolio size, and not the fund size will be in almost reaching 10 million. But that was like a month plus a month ago. Yes, but that is that gauge around that you can look at. So, besides that, any other questions that you have? Time horizon, yeah, I think I've answered almost all the other questions. And and if there's no questions, then I'll actually pass it back to Yanting. But if you have any questions that you would have thought about it, you can always reach out to the BD team or the IC team, and we are more than happy to actually help you to answer this. All right, thank you.
Thank you, Pushan, for sharing us the insightful information of the portfolio. Okay, now let's switch back to Okay, now shifting back to the sales part. When you're meeting with client, you can always start this conversation with these four questions, asking them, where do you plan to send your children for tertiary education, local or overseas? What is the estimated education cost to start your planning? For example, course, university, and etc. How long is your saving period, and what is the education inflation rate? So if the client answer you with like a certain prefer country or prefer university, or they have already a plan, or maybe they don't have it, you can always use our i-EDU tools on the portal to better visualize their saving for their education. So now I will pass it to Carl to demo the i-EDU tool on our portal to give you a better visualization.
Hi everyone, thanks Nidhi. Okay, hold on, let me share my browser here. Is it visible? Everyone can see? Okay,
Yeah.
so give me a sec, hold on, yeah. Okay, so Okay, my part here, I'll be walking you through the i-EDU platform on the iFAST portal. And this is somewhat similar to the IGM portal as well, for those who are with IGM. So essentially, it's a powerful tool that is designed to help your clients. Sorry, can I make it bigger? Hold on. How about now? Is it? Hold on. Okay. Is it good? Okay. So where was I? So whether your clients are actually planning to send their children to a local university or abroad, so this tool actually helps them visualize their education expenses. It allows you to project your future costs and also creates a plan tailored to your client's needs lah. All right. So when you log in, so what you see here is I've already logged in into the iFAST portal here. So first navigate through products. All right. Sorry, hold on. There's too many things on top here. Products. Head to manage portfolio, and you will see under tools here, you will see i-EDU. So you click on that, and it will immediately put you to this page here. All right. So this is the launch page, the starting page. So you click Explore Now, and this will be a disclaimer. So this disclaimer here is a typical disclaimer whereby we mentioned that the simulator provides estimates only, and it's not a financial advice in that sense, and it's just uh, to make sure that our clients, I mean, our advisors are all aware of the risks involved when it comes to actually pushing this product to your clients. So you click on to agree on the disclaimer here, and you click proceed. So this will bring you to the formal education journey page. So what you see here will be a range of timeline, different education stages, where you start from preschool, primary, secondary, and higher education. So for this purpose, I'll select higher education. I'll click next. Uh, Click sure thing. Okay, for this page, please input your current age of your child. So for example, I'll put 2 years old here. And this page shows you a quick look on the child education expenses based on the country of choice. So for this reason, okay, the thing that you can actually toggle here is your education age, the targeted education age. From let's put 20 years old. Your estimated years in overseas, let's say the cost for undergrad would be, let's say, an average of 3 to 4 years. I'll put 4 here, and I'll select United Kingdom. Okay, so what it shows here is your average inflation rate per year and also the estimated cost. If you toggle down to the page, you'll see the total estimated cost for your children's education, all right, by 18 years. Because remember the previous page, we put the child's age at 2, targeted age, education age is at 20, so it's 18 years here. So it's already simulated to take into account of the inflation rate. Okay, click what do I do? So it'll bring you to this next page here, where it actually exhibits all the common tools that perhaps parents would actually look into when it comes to education investment. So you have your FD, your SSPN, your insurance savings, real estate, unit trust, offshore funds, and share investment. So just to show you, if you click on, for example, unit trust, it will show you a brief overview of how that product actually helps and just a basic understanding of it. So i-EDU here is where we actually state, this is all what my colleague Yan Ting actually presented earlier. So it has an holistic portfolio, stringent product selection, it's active management by our portfolio team, and also with the team of researcher, our research team, and also our portfolio managers, we actually, manage the portfolio as a whole. So click to know more. Okay, so it will show you the suggested portfolio here. So there's two options, as we shared earlier. So there's i-EDU Achiever. So this is an expected return of 8% per annum, and also the i-EDU Scholar portfolio at 6% per annum. But if you notice, it will suggest the i-EDU Achiever. So it's somewhat highlighted here, the outline here. So don't worry, it's not a selection, it's just to showcase here. So you click on next. So this will be the overview of the education plan. So the items here that you can toggle is actually on the portfolio. Okay, you select. For this, I will be selecting the i-EDU Achiever portfolio. And the investment plans here, the only options is for you to choose either the self or default. So default is going to be your minimum investment amount of 1,000, and the RSP is of course 200 ringgit. All right. But if you put on self option, you get to choose probably your initial investment amount. For example, instead of 1,000, maybe I want to put, a 10,000 amount here. So that would actually translate to your new monthly savings amount. And they will show you also a graph here that we actually benchmark it against the FD at 3.5% per annum. So you can see the progress as the years goes by. So this is essentially to showcase and visualize the difference and the growth. Okay, so click. Okay, once you actually have a brief overview on what you're getting yourself into, we get explaining to your clients, you click Start Invest Early. And this page actually shows you the comparison, the difference between the power of starting early. So if you look to the left side here, it just shows you Papa Albert here. So it just showcases, okay, if you start now, if the child's age is at 2 years old, years of study is 4, and the inflation rate is probably average at 4.3%, we are going to we will have to actually allocate about 2,581 ringgit and 79 cents per month to actually reach this financial goal. All right. But if you look on the right side here, so what if Mama Bernie starts later? So this tool just tells you the impact if you actually delay the saving. So for example, let's say if I actually start saving at age of 8 years old. So in order for me to achieve my financial goal of 1.2 million, I would actually have to start saving a bigger amount, a significant bigger amount per month in order to catch up. So this gives you a very good visualization tool on the difference and the impact of starting the investment early at an early age. All right. So once you've done the whole pitching with the client, you can actually click open account, and this is very straightforward. It shows to you it's either your client is new to iFAST or an existing client. So a new to iFAST will just show you the account opening page, and this one you can actually proceed as usual. So open the client account. If you go to iFAST existing clients, oops, sorry. Give me a sec. Sorry, for those wondering, this is actually a trial version. So just to show you guys on the layout. Let me just get back there. Okay. Okay, sorry, this is where I left off. So if it's an existing iFAST client, click on this. It will show you the list of all your existing clients. Select the client interested in the i-EDU portfolio. For example, I'll just click on one, and it will bring you to this page. And then you can proceed accordingly. Select Manage Portfolio. And you can see here, the i-EDU Achiever portfolio is here, and the i-EDU Scholar portfolio is here. So you just select on this, and you just proceed accordingly. Clean the values, the figures here, and you can press continue. So essentially, that is it for the flow. But if you guys have issues later on in terms of the interface, all right, or any feedbacks, you can actually reach out to the BD team separately, and we'll assist you accordingly. Okay, so now I will go back to the slide. Okay. Okay, can you see the slide? Okay, so that is the i-EDU tool demonstration. Okay, next page. So, okay, just to give you a quick summary on this. So, the whole objective of this is for you to actually understand your client's goal when it comes to saving for their child's education expenses in the future. So it creates urgency. So, and real life cost examples, because we take into, the inflation rate and whatnot. And it also offers a very flexible and low entry and long-term solution, all right, for them to actually achieve their objective and their targets for their child. RSP element also encourages the force of saving habit with the minimum of 200 RSP. So this, like Bhushan mentioned, it actually takes out the whole emotional element of it, and you discipline actually keep on feeding into the portfolio as it grows. And you can actually use this i-EDU tool, the one that I actually exhibit and demonstrated earlier. Use it as a tool for you to converse and have a deeper conversation with your clients. And it actually gives you a very good visualization on the impact, when to start, what happens if you start later on, and whatnot. And I think the best message here is, it gives you, the clients, the power to actually act immediately when it comes to saving for their child. So that's the whole idea of going through the whole process with them holistically. Okay, so next, I want to actually tie in our recent RSP campaign. So for this, I think we've actually shared this prior to our previous engagements, but I'll just mention here that why this combo works is that the i-EDU tool actually shows clients, one, the importance of starting early and investing consistently towards your child's education. And the best way to put this into action is through the RSP saving plan. So that's why I say that the RSP campaign actually ties in very well with the i-EDU portfolio. Okay, so I'll just highlight real quick. The RSP campaign actually started in 18 April, and it ends on the 30th of June. So every advisor, you get to earn about 50 ringgit cashback for every 10,000 in new RSP, but minimum 6-month tenure and minimum 1.5% sales charge. All right. So you'll get a chance to win an iPad Air for the top 5 advisors by a lucky draw. So the more RSPs, the more entries you get, and you'll also get recognized. So the top 3 firms will also, and total highest RSP contributions will get an iFAST exclusive trophy. All right, to mark the excellence in pushing this campaign. So, so for me, I would say the i-EDU platform shows the why, and the RSP campaign delivers the how to do it. So together, they give clients clarity, structure, and also the initiative, the kickstart, while rewarding at the same time, while rewarding advisors for guiding them in the right direction. So I think both of this goes hand in hand very well. So that will be all from my side. If there's any questions, further inquiries, or you need any further clarification regarding this, both this campaign, also the i-EDU portfolio, feel free to reach out to us at the BD team. Okay, so I'll pass it back to my colleague Yanting to run through and actually conclude the session.
Okay, thank you, Carl. Okay, so now will be our Q&A session. So feel free to ask the question Yeah, I think we have also answered some of the question we got question. So let me take a look. Mm, for local university, we do have on the portal. Because we actually cater to the university overseas, and we have calculated for the cost living. So for local university, it only count for the tuition fees. So yeah, currently we don't have that feature. Maybe in future we can do some enhancement on that. Is the okay?
Yes.
Mm, yeah. So due to time constraint, if you guys have any more further question that we haven't answered it, you can feel free to reach out to your respective PD, and we are happy to help. Yeah. So thank you everyone for, oh, sorry. Yes. Oh, okay, okay, sorry. Okay, so thank you everyone for joining the session. Yeah. Hope we work on it, and if you get any question, always feel free to reach out to your respective PD. Yeah, thank you. So we'll end the session here.